In a historic move that underscores the growing significance of cryptocurrency within the U.S. financial landscape, the White House recently hosted its first-ever crypto summit. Convened by President Donald Trump and his crypto czar David Sacks, the March 7 event aimed to signal a shift in regulatory posture towards digital assets, particularly following the previous administration's more aggressive stance under President Biden. However, the summit concluded with mixed reactions from the crypto community, leaving many investors feeling underwhelmed. At the heart of the summit was the announcement of a strategic Bitcoin reserve alongside a broader digital asset stockpile. These initiatives are intended to safeguard and manage the U.S. government's existing cryptocurrency holdings, which primarily consist of assets seized in criminal proceedings. While the creation of these reserves was hailed as a step towards legitimizing cryptocurrency in the eyes of mainstream finance, critics have pointed out that the measures lacked the bold commitment many in the industry had hoped for. Despite the unveiling of the reserve, Bitcoin's price dropped approximately 3% on the day of the summit and was on track to finish the week down around 7%, trading at about $87,000. This tepid market response can be attributed to the lack of a clear path for new government purchases of cryptocurrencies, as the executive order stipulates that any future acquisitions must be budget neutral, effectively limiting the scope of government involvement in the crypto market. David Sacks in his remarks described the strategic reserve as a digital Fort Knox aiming to ensure proper control over the nation's digital assets. He also alluded to the government's previous ad hoc selling of Bitcoin, which he argued had resulted in lost value for taxpayers. However, industry insiders like Jeff Park from Bitwise voiced concerns that the reserve's current structure offers little more than a rebranding of existing holdings without actual market engagement. "We asked for too little," Park tweeted, expressing disappointment that the reserve would be limited to Bitcoin while other cryptocurrencies were sidelined. Trump, who has previously embraced the crypto community, reiterated his ambition to position the U.S. as a leader in digital finance. "We feel like pioneers," he stated, reflecting a desire to foster innovation in the sector. Nevertheless, this enthusiasm did not translate into the concrete support some investors had anticipated. Charles Edwards, a hedge fund manager, disparaged the initiative as a pig in lipstick, criticizing the lack of active buying as a missed opportunity for the government to leverage its holdings effectively. While the summit did not yield the decisive action many were hoping for, it did mark a shift in the conversation around cryptocurrency at the federal level. The crypto industry played a significant role in the 2024 elections, with over $245 million in political contributions, signaling its growing influence in U.S. politics. This newfound attention may have played a role in the Trump administration's decision to host the summit, as it attempts to build bridges with a constituency that has proven financially and politically potent. As the U.S. moves forward with the establishment of its cryptocurrency reserves, the potential for regulatory clarity and support remains uncertain. The framework laid out by the White House raises questions about transparency, market trust, and the selection of assets included in the reserve. Observers are keenly awaiting further details, particularly regarding the government's intentions and the implications for the broader market. The crypto community is at a pivotal juncture. While the creation of a strategic reserve is a notable step towards mainstream acceptance, the lack of proactive measures has left some investors wary of the government's commitment. As discussions continue, the future of cryptocurrency regulation and investment in the U.S. will undoubtedly evolve, reflecting the complex interplay between innovation, regulation, and market dynamics. With more developments on the horizon, the crypto world will be watching closely to see how these initiatives are implemented and what they mean for the industry's future. In a significant move that signals a shift in the U.S. government's approach to cryptocurrency, President Donald Trump recently convened the first-ever White House Crypto Summit, unveiling plans for a strategic Bitcoin reserve. The summit, attended by prominent figures from the digital asset space, aimed to discuss the administration's commitment to fostering a more favorable regulatory environment for cryptocurrencies, contrasting sharply with the previous administration's stringent policies. At the heart of this initiative is the establishment of a reserve that will primarily consist of Bitcoin seized during federal law enforcement operations. David Sachs, appointed as the White House's crypto czar, described the reserve as akin to a digital Fort Knox, emphasizing the strategic importance of safeguarding the nation's digital assets. The estimated Bitcoin holdings currently stand at around 200,000 coins valued at approximately $17.5 billion, a figure that reflects the potential financial benefits of this new policy. While the announcement of the strategic Bitcoin reserve generated considerable excitement, it also invited skepticism from some sectors of the crypto community. Critics pointed out that the reserve would not involve any new purchases of Bitcoin, thereby limiting its potential impact. Charles Edwards, a hedge fund manager at Capriol Fund, succinctly characterized the initiative as a pig in lipstick, suggesting that it merely repackages existing assets without introducing any meaningful change. Moreover, the executive order stipulates that any future acquisitions of Bitcoin must be budget neutral, meaning they cannot add to the national debt or deficit. This cautious approach appears to reflect concerns about the fiscal implications of government involvement in cryptocurrency markets, a sentiment echoed by Jason Yanowitz, co-founder of Blockworks. He cautioned that the inclusion of various cryptocurrencies in the reserve could lead to arbitrary asset selection, potentially undermining market trust. Despite these concerns, some analysts have welcomed the initiative as a necessary step toward legitimizing cryptocurrency within the U.S. financial system. Investment director Russ Mould noted that maintaining a reserve of seized assets is a more sensible strategy than selling dollars to buy cryptocurrencies, particularly given the dollar's status as the world's reserve currency. Market reactions to the summit have been mixed. Following the announcement, Bitcoin prices dipped, reflecting investor disappointment over the lack of concrete plans for new purchases. As the summit concluded, Bitcoin was down about 3% on the day and nearly 7% for the week, highlighting a disconnect between the summit's aspirations and market realities. Trump has made it clear that he envisions the U.S. as the crypto capital of the world, and the administration's focus on this emerging sector could have significant implications for its future. As Trump and his team continue to explore the potential of digital assets, the crypto industry is poised for a crucial test of its influence on U.S. policy. Looking ahead, the establishment of a strategic Bitcoin reserve may not only reshape the U.S. government's relationship with digital currencies but also set the stage for a broader acceptance of cryptocurrencies in mainstream finance. However, it remains to be seen how this initiative will be implemented and whether it can foster the kind of innovation and growth that industry leaders are hoping for. As the landscape evolves, transparency and accountability will be vital in ensuring that the crypto community can thrive under this new regime. In a groundbreaking move that has ignited significant debate within the cryptocurrency community, President Donald Trump has officially established a strategic Bitcoin reserve for the United States. This initiative, announced through an executive order, aims to create a governmental stockpile of Bitcoin and other digital assets with the intention of utilizing confiscated coins from criminal and civil proceedings. This strategy underscores a stark shift in the U.S. government's approach to digital currencies, positioning the nation at the forefront of cryptocurrency innovation. White House AI and crypto advisor David Sachs described the reserve as a digital Fort Knox, drawing parallels between this initiative and the storied military facility that safeguards a substantial portion of U.S. gold reserves. "What we want to do is make sure that with the remaining Bitcoin that we have," Sachs noted, emphasizing the importance of maximizing value for American taxpayers. The current holdings are estimated at 200,000 Bitcoin, valued at approximately $17.5 billion. A figure that underscores the potential economic impact of this reserve. However, the announcement has not been without its critics. Some crypto advocates have expressed disappointment over the government's cautious approach, arguing that the lack of active buying of Bitcoin diminishes the potential benefits of the reserve. Charles Edwards, a notable figure in the Bitcoin hedge fund landscape, dismissed the initiative as a pig in lipstick, suggesting it merely repackages existing holdings without offering any new value to the taxpayer. The executive order also stipulates that any additional Bitcoin purchases must be budget neutral, meaning they cannot contribute to the national debt or deficit. This cautious financial strategy reflects a broader governmental concern about fiscal responsibility, particularly in light of increasing scrutiny over national expenditures. Jason Yanowitz, co-founder of the crypto firm Blockworks, echoed this sentiment, warning that including a variety of cryptocurrencies in the reserve could set a dangerous precedent, potentially eroding public trust through arbitrary asset selections. Despite the reservations expressed by some, others view the establishment of a cryptocurrency reserve as a prudent move. Russ Mould, investment director at AJ Bell, argued that maintaining existing assets rather than purchasing new ones is a more sensible strategy for the U.S. government given the dollar's status as the world's reserve currency. It would surely be bizarre for the U.S. to sell dollars to buy crypto, he remarked, reinforcing the notion that the reserve could serve as a stabilizing force in the volatile world of digital currencies. The summit, hosted by Trump alongside key figures from the cryptocurrency sector, marked a significant turning point in the administration's stance on digital assets. The event was aimed at fostering dialogue between policymakers and industry leaders, with discussions centered on creating a regulatory framework that balances innovation with consumer protection. Trump's commitment to promoting the United States as the crypto capital of the planet has resonated with many in the industry, especially following the Biden administration's more stringent regulatory approach. Interestingly, the summit also coincided with the launch of the Dollar Trump meme coin, which reportedly attracted significant financial backing, amassing $350 million within just 3 weeks of its release. This development highlights the intersection of political branding and cryptocurrency. As the Trump administration continues to engage with the crypto community on multiple fronts. As the U.S. navigates this new terrain, the implications of the strategic Bitcoin reserve remain uncertain. Questions linger regarding its execution, potential legal challenges, and the long-term benefits for American taxpayers. While the administration's focus on transparency and independent audits may alleviate some concerns, the real test will be whether this initiative can effectively harness the economic potential of cryptocurrencies without falling prey to the pitfalls of speculation and mismanagement. Looking forward, the establishment of a cryptocurrency reserve may pave the way for further exploration of digital assets within the U.S. financial system. As regulatory frameworks evolve, the outcome of this initiative could redefine the relationship between government and cryptocurrency, potentially influencing global markets and setting a precedent for other nations to follow. The coming months will be crucial as stakeholders from all sides observe how this unique blend of politics and technology unfolds in the rapidly changing landscape of digital assets. In the ever-evolving landscape of cryptocurrency, Ethereum stands as a pivotal player, capturing the attention of investors and analysts alike. However, recent developments have raised concerns about its price stability, particularly amid challenges associated with the Pectra upgrade. As Ethereum ETH grapples with these issues, its price trajectory is now heading towards the average cost basis of investors, prompting discussions about its future and the factors influencing its valuation. Currently trading at approximately $2,138, Ethereum's value has experienced notable fluctuations, reflecting broader market volatility. Over the past year, ETH has faced a steep decline, falling by 33% and suffering an additional 31.4% drop in the initial months of 2025. This recent downturn has led to speculation about whether these trends represent a temporary setback or a more extended period of decline. The crypto market is back to its volatile old ways, noted financial analysts, highlighting the uncertainty surrounding ETH's future performance. A significant catalyst for Ethereum's struggles appears to be growing competition from alternative cryptocurrencies and ongoing concerns regarding security and network upgrades. The anticipated Pectra upgrade, which aims to enhance scalability and security by merging previous updates, has faced delays that could impact investor confidence. With new contenders like Solana and Cardano gaining traction, the pressure on Ethereum has intensified. The decentralized revolution seems slow to start and a plethora of Ethereum alternatives are emerging, said market experts, indicating that Ethereum's position as the leading smart contract platform is increasingly at risk. Despite these challenges, optimistic forecasts suggest a potential rebound for Ethereum. Analysts project that if the Pectra upgrade successfully improves network performance, ETH could reach significant price milestones, including predictions of hitting $5,000 by 2025. However, the broader economic environment and potential market corrections could also influence this outlook, with estimates suggesting a possible low of $2,917 in adverse scenarios. As Ethereum navigates these turbulent waters, the introduction of new staking options could play a crucial role in its recovery. Simply Staking, a staking service provider, has launched an innovative dashboard allowing users to stake ETH without the traditional requirement of holding 32 ETH. This development could democratize participation in Ethereum's ecosystem, attracting a broader range of investors and bolstering the network's decentralization. Ethereum staking strengthens the network by validating transactions, enhancing scalability, and supporting decentralization, emphasized company representatives. The long-term prospects for Ethereum remain promising. Analysts project that as the network matures and adoption increases, the price could steadily climb, potentially exceeding $15,000 by 2030. Factors driving this growth include the successful implementation of Ethereum 2.0 and ongoing advancements in decentralized finance DeFi. The transition to proof-of-stake promises to improve scalability, reduce transaction fees, and make Ethereum more environmentally friendly, experts noted, underscoring the fundamental shifts occurring within the Ethereum ecosystem. In conclusion, while Ethereum faces immediate challenges including price volatility and competition, its future remains a focal point for investors. The upcoming Pectra upgrade, coupled with innovations like simplified staking options, could provide the impetus for recovery. As the crypto market continues to evolve, Ethereum's ability to adapt and thrive will be critical in determining its long-term success. Investors are advised to remain vigilant, as the next few years could hold significant opportunities for those willing to navigate the complexities of this dynamic digital asset landscape. As the cryptocurrency landscape continues to evolve, one asset that has recently garnered significant attention is Solana SOL. After experiencing a notable price decline and grappling with various market pressures, Solana has sparked speculation about a potential rally back to the $180 mark. While its current trading price hovers around $145, representing a 50% drop from its all-time high of $295 reached in January, several factors could catalyze a resurgence for SOL in the near future. The recent uptick in Solana's value, with a 17% increase following a low of $125 on February 28, hints at a glimmer of bullish sentiment among investors. However, this optimism is met with caution as SOL faces formidable resistance near the critical $180 threshold. Analysts attribute much of the recent downturn to the broader memecoin market crash, which has led to a decrease in on-chain activity across various sectors, including liquid staking and NFT marketplaces. Data from DeFi reveals a striking 73% drop in Solana's blockchain fees over the past month, indicative of waning interest in the network. Additionally, the number of active addresses on Jito, Solana's leading liquid staking application, plummeted by 56%, while the NFT marketplace Magic Eden saw a 38% decline in users. These statistics underscore that Solana's struggles may not solely stem from the collapse of memecoins, as other networks like Ethereum have not experienced similar declines. Moreover, the lack of demand from leveraged traders has also emerged as a significant impediment to SOL's recovery. The perpetual futures market has witnessed a negative funding rate, suggesting a prevailing sentiment among traders that favors short positions. This is compounded by the fact that a small group of users, primarily market-making firms and bots, has been responsible for a disproportionate share of network activity, raising questions about the long-term sustainability of Solana's growth. Adding to the complexity is the political landscape surrounding cryptocurrencies, particularly with the recent announcement of a U.S. strategic crypto reserve by President Donald Trump. The reserve is expected to include Bitcoin and Ethereum as well as Solana, but it has not yet garnered the expected enthusiasm from traders. Trump's comments regarding cryptocurrencies have reignited interest in SOL, especially with the potential for his administration to support innovative crypto policies. However, some commentators have pointed out that the inclusion of Solana in the reserve appears to lack substantial backing, given that no notable investments have been made by Trump's financial initiatives in the token. In light of these developments, four key areas have emerged as critical for Solana's potential recovery: revitalizing on-chain activity, fostering demand from leveraged traders, addressing the dominance of MEV bots in network transactions, and securing tangible investments from political allies like Trump. As the cryptocurrency market braces for a pivotal moment with Trump's upcoming crypto summit, all eyes will be on Solana. While the road to reclaiming the $180 level remains fraught with challenges, the interplay between market dynamics and political developments could ultimately shape the future trajectory of SOL. Investors and traders alike will be keenly monitoring these factors as they navigate the tumultuous waters of the crypto landscape, hoping for a resurgence that could once again position Solana among the top contenders in the market.